Hey everybody, it is Tuesday here in Houston, Texas. All right, so, boy, it's getting warm. All right, so I've been wanting to talk about this since yesterday. When you look at these strategies using cash value life insurance, they call them different names. There's a family banking strategy, and there's the infinite banking strategy, and there's the individual banking strategies. Okay, so I'm going to kind of break them down of the three ways that I've come across that you can use these to your advantage. I'm going to break down why it's an advantage to you. Okay, so first one is an individual banking strategy. Okay, so this would be uh, you get a policy that's big enough, and you have. I'm going to give you a good example. My son got a $250,000 index universal life. His target premium is $168.13 a month at 32 years old in good health. I'm proud of him for that. All right. He can max fund it to $1,066 a month, which is $12,750 a year. Okay. And that's how much he can put in it, and that's tax deferred and it's tax advantaged. So it's kind of acts like almost double what a Roth IRA is. Right? But he doesn't have to wait till he's 59 and a half to be able to draw that money without paying tax and penalty. He can get up to 90% in what's called an awash loan. Now, he's a HVAC tech, so in the summertime, he makes money hand over fist, makes more money, so he needs to have a budget, what he spends, doing what he does, what everything outside the budget, everything above and beyond what he needs for his budget, he needs to sock away into his policy. Okay, now he's real handy. He used to do home remodeling in San Diego, maritime construction in Pensacola. Now he's doing HVAC and electrical and back in San Diego. So if he finds a property that's a deal, it's in distress, they're in default, they're getting divorced, whatever, he can get a deal. He can borrow from his policy, pay down payment, closing costs, fix up the property, flip it, put the money back in his policy, and go look for another one. Okay. Now, the family banking strategy, this would be like somebody who has a mortgage and on their house. All right. So you overfund the policy enough to pay the target premium and enough to cover your debt service for your mortgage payment, any credit cards, your car loans, student loans, whatever. And then you borrow the money from the policy to pay down your debt. Now, your same dollar that you're using you're getting double duty on your money. You're going to get the growth on your money in the policy. The same dollars are paying down your debt. Now, there's little things you can do by paying just the principal payment, like 11 days after the due date, will knock out all the principal or all the interest for the next month. So if you did that on a mortgage, a $250,000 loan, your 7% interest, your principal interest payment is $1,663 a month, and but only $253 a month goes toward principal. You pay that if your due date's the 1st, you pay it on the 12th. You'll knock out over $1,300 worth of interest. You'll pay off your mortgage if you just had the mortgage, in less than 15 years. Okay. Now, if you have other debt, car payment, student loan, credit cards, you do a debt roll up, you can pay that between 7 to 10 years. Okay. And pay it off faster. Okay. And just paying that amount of money, that debt service amount, into the policy, and paying it, borrowing that money on a wash loan, which means you don't pay interest on it, and your death benefit pays it off. But if you're paying every month, that interest is not really accruing. Okay, and you can knock that debt out at the same time you're building that nest egg for retirement. Okay, then there's the infinite banking strategy. Now, this was for like business consultants. I'm surrounded by business consultants, by the way. Okay, so they will find a business that they have some understanding about. They may have a market for some business. They may see something that they may be able to change some things with them and help them reduce their expenses. They they can increase their profitability and make them more marketable very quickly. Okay, and so they give me a percentage of your business. Some people do it for 51%. Some people will do it for whatever, right? They will increase their cash flow of that business significantly, and then they go and sell their interest in that business to somebody else or back to the business owner, and then they put that money in their policy and they go look for another one. This guy was explaining this. He's got like 12 of these policies. He's just socking money into them, right? And it's using it as a better place. You get a better rate of return, better tax advantages, more liquidity than the bank. Under easier underwriting. Now it's your money, okay? But if you had $1 million in the bank, you can't just go down there and draw it all out today, okay? May take you a little. I know somebody who has a bunch of money, it's in the billions, with a big bank, and they still haven't been able to get it out after almost a year. Get it all out. They had to let it go in tranches. Okay, so this is way better than having your money in the bank. So those are the three things that you can do. Now I am redoing my website right now. My website is mybusinessisyourbusiness.info. And one of the things I'm going to be doing is having a link to Jason Sisneros. Guess what he does? He does business consulting, right? And he helps businesses, get it going and become profitable. And they need an influx of cash, and he does what he does and gets some interest in that business and blows it up, and everybody gets paid. All right, so I'll be promoting him and the Chairman Project. All right, that's every Saturday morning at 10 o'clock. Oh, I'm sorry, at 8 o'clock Central Time. All right, so you should get on it. All right, you can go on to the Jason's website, Jason Sisneros, and you can see or get on his X account or Twitter. All right, hope this helps. If it does, go ahead and share it. Bye bye.